This week on the Retirement Quick Tips podcast, I'm talking about the key provisions of the One Big Beautiful Bill Act that was recently signed into law and how that might impact you. Today, I want to talk about how the One Big Beautiful Bill really hits home the importance of planning ahead, making sure you are taking full advantage of all the provisions while avoiding some of the big mistakes. I talked about it earlier this week, but my main takeaway in reading through the various provisions of this act is that it adds layers of complexity. And for those of you listening who have higher incomes, what that means is that the stakes are higher. So, especially when it comes to taxes, nothing is ever done in isolation, and you really want to consider the ripple effect of the decisions that you're making. Everything with this One Big Beautiful Bill, whether we're looking at effective dates, a lot of the provisions that I've talked about this week that are in this bill are temporary. So it may apply this year, next year, or the year after, but after 2028 or after 2029, when some of these things sunset and potentially expire, those effective dates change and things can revert back to what they were before. There's different income phase outs. Tax law, this isn't a criticism of this particular bill because this is what the federal government does with everything. They create a bill, pass something like this, and it's full of different deductions and benefits, possibly new revenue or tax sources for the government as well. And each of them have different income phase outs. It would be nice if it was a bit more uniform, where it's like, hey, for everybody who makes over, X number of dollars per year, a lot of these deductions or all these deductions are phased out. But, phase outs are going to be different depending on what the deduction is. For some phase outs happen at a much lower income level, below 100,000. Other phase outs don't happen until much higher. But the more I read through all these different key provisions, I just realized how all these new deductions, phase out rules, effective dates, it adds a lot of complexity. So I would suggest that if you are in a higher income tax bracket, where these stakes are higher, you want to make sure that you're doing careful planning, looking at what are the things you can do that are going to make adjustments to your adjusted gross income, whether you itemize or take the standard deduction. I didn't talk about this at all this week, but another big provision is estate and gift tax exclusions. A lot of the provisions from the original Tax Cuts and Jobs Act that were set to expire at the end of this year were permanently extended. The state and local tax deduction, otherwise known as SALT, the cap was raised on that. But again, there's phase outs for that as well. So if you have a higher income, you're not going to benefit on that. I didn't even touch the different tax features of this bill that apply to qualified business income, business owners. So a lot of complexity. I guess the bottom line here is that if you have a high income, especially regardless of your income, if you are a business owner, if you have any complexity to your tax situation beyond just being a normal W-2 employee with an average income, I think most people are going to benefit from hiring a competent tax advisor. Once your income gets above 100, 150, 200,000, and regardless of income level, if you are a business owner, you have some type of self-employment income, I think the stakes are just too high, the pitfalls are too much, and the cost trade-off for hiring a tax advisor versus the benefit that you receive in not missing out on these deductions, not making big mistakes. Because again, there's a ripple effect. You make one decision here about doing a Roth conversion, let's say, and now, whoa, you just put yourself into a whole new tax bracket that impacted your Medicare premiums and like a million other things. So we want to be very careful about how we approach and understand these new laws and the implications that come with certain decisions that you might make about your taxes, your investments, charitable contributions, setting up different accounts for your kids, estate tax considerations. So It's a good time to be a tax advisor, I think. And for the few hundred or a few $1,000s, depending on how complex your tax situation is and who you're hiring, my biggest takeaway after reading the complexities of this bill is that if you are not already working with a tax advisor, now is your window of opportunity to go out and find somebody. Do not hire a tax advisor in beginning of 2026 because they're already in the throes of tax season. I know this. I am married to a CPA who was a public account practicing CPA for the last 20 or so years. I've been through my fair share of tax seasons. They get busy in January. So the tail end of 2025, if you're going to find a tax advisor, if your income is high enough, if your tax situation is complex enough, if you have a small business or you're a consultant or you have something other than just standard normal level of W-2 income, then I think you're going to benefit at least from talking to somebody and outsourcing your taxes to somebody, again, who is competent. So that's my 2 cents. I think too many people, for cost reasons, do not hire a tax advisor. And when you add up what it costs them over the years and just not having the ability to run something by somebody. Hey, what is it? If I'm thinking about doing a Roth conversion, I'm thinking about selling this stock. I have this rental house that I want to sell or whatever it may be. Just having someone to bounce ideas off of. Who cares if you're paying them an hourly rate for their time? That's my 2 cents for whatever it's worth. Go out and find yourself a good tax advisor if it makes sense in your situation. The cost trade-off over many years of working with the right person, in my opinion, well worth it. All right, getting off my soapbox now. That's it for today. Thank you so much for listening. My name is Ashley Michigay, and this is the Retirement Quick Tips Podcast.